Piyush is with us, Piyush Garg from ICICI Securities, G. Chokalingam, Economics and Research and Advisory. Both are with us here. Gentlemen, thanks very much. Good to have you both. Piyush, very quickly, yesterday was mostly all short squeeze, you think?
Not difficult to say, but I think it would be combination, Prashant. I think some bit of buying also would have emerged later on maybe. Initially it could be a short squeeze that might have happened. So it could be because there was a global rally actually. I think Asia was very strong when we opened. US had rallied. So I think it was a combination of factors I think which aided. And this market movement is entirely in sync with what is happening globally. There is nothing too much domestic about this market move in the last 1 month if you see. Couple of days back when globally markets were going down, we were also going down. Though we were going down, I think less in percentage terms. Relatively, we are doing a little better than the global markets. But the market is more in sync with what is happening globally in terms of market move.
But we've been getting these, 1 to 1.6, 1.7% rallies, as I've been saying. So if you go back, we had a 1.4% rally on the 26th of April. On the 9th of May, we had a 1.7% move. And I can go back as well. And all these are essentially followed by 3 or 4 or 5 days of, 3 or 4, 5 down days essentially. And then the market just pops higher. 44 points up on the Nifty and 175 points on the Sensex. As always, we'll focus on earnings first. L&T should be the big one. It was up 9% in the pre-open, so should be up that much or more in as far as open is concerned. 11% higher. So 14.30, it's a strong start. We'll look at GAIL and see what's happening there. That's Gas Authority. EBITDA margins, EBITDA was the problem. Operating numbers were weak. That will come up. It's up 1/3%, so keep an eye there. Tata Steel reported better operating profits. That will come up and let's look at that. It's up about 0.65. Then you had EIL, that's Engineers India Limited. That will come up on your screen. It's down 2.5%. Cummins reported weak set of numbers for the fourth quarter. It's down 3%. Thermax reported earnings and profits are lower year on year. It's down 2%, Thermax. HCL Info reported a higher loss compared to what the loss last quarter. It's down 5%. Prism Cements reported earnings and flat profits. Aditya Birla Fashions reported and there was a loss compared to a profit in the third quarter of 16 and is down about 4.5% as well. So this is the earnings roll call in that sense. What else do we have? L&T is now come off the high. The gap up was 14.48. It's already some 50 rupees off the high. So that is what we are looking at. BHEL is up 1.25. Tata Motors is up 0.9. Tata Motors DVR is up 0.9. Dr. Reddy's is up 0.9. Ambuja, Idea, Bajaj, Kotak, Asian Paints are some of the other stocks which are coming up on our screens. Tech Mahindra, which was the biggest gainer, it's down about 0.8% or so, 525. But there's hardly a dent after yesterday's 10% move. NTPC, Wipro, ITC are the other 0.5% cuts that we are seeing at this point. Okay, so some of the other stocks, follow-through stocks from the last couple of days. So I don't know if you could look at VRL Logistics. So yesterday was down 12. The day before yesterday it was down 20. Stock was at about 395 bucks 2 days back. It's up 3% now, but 284. So it's still down 100 rupees from that point from 2 days back. That's essentially. Let's look at Just Dial. If we could quickly, Just Dial is coming up with about a 1% gain. The stock was flat yesterday, but it's lost some 16% in the previous 2 days before yesterday. So that is that. Jubilant Foodworks, if we can look at, it's up about 0.17%. Let's look at Ashok Leyland, which kind of saw a bit of a... Okay, Jubilant is flat, slightly lower. You've got Ashok Leyland, which is down about 4.25%. That's about 97.25. Yesterday, it's up about 0.5%, 0.6%. at this point. Pankaj, anything else? Follow up from yesterday?
Right, Prashant, I just wanted to highlight some names. So Sharda Cropchem is up 12%. They were supposed to declare numbers, but I've not seen an exchange notice, but I think maybe it may have come in the paper. So it's up 15% and looks as if the numbers might be quite strong. Maybe that's the reason why it's up. Ujjivan Financial Services is up 8%. Results came out in market hours yesterday, but still, the stock did not react that time, but right now it's up 7%. L&T, as you pointed out, is $50 off the day's high, but still 1400, it's up 8% or so. VRL Logistics is up 3%. It was 10% off the day's low. There were two block deals that happened yesterday. Two P-note players have exited, and I think that's the trigger that essentially market has taken for VRL Logistics. The next one, that I wanted to point out, names like Gaze, names like India Bull Real Estate.
All right, just come back
Realty.
to you.
Yeah.
But VRL is up 3.6, and so there were Goldman Sachs and I think one more player, but that's essentially holders for participatory note holders essentially. So we don't know the underlying investors there. But there have been exits. 25 points on the Nifty at 79.59. And of course L&T is the stock of the day that we have at this point in time. It's up 8%, but good 55 rupees off the high of the day. Let's look at Genus Power. That also reported earnings, and Genus is down, I think, some 7% or so. That will come up. It had a decent run, very decent run. It's back at about under 50 odd rupees or so, 4 rupees lower on Genus Power at this point. Choka, long results list.
Yeah.
L&T, your thoughts?
No, it's beyond expectation. In fact, we were quite positive before results, but results are beyond expectation. The infrastructure segment, the growth and segment profitability is very impressive. I think probably the worst is behind us for L&T. So maybe I won't suggest chasing after 8% rise, but certainly in future, as and when the market sentiment is a little bad and the stock corrects even 2-3%, one should use that opportunity to grab it.
Okay, fair enough. But can we? The question is, has it finally turned a corner as far as execution is concerned? Can we answer that question confidently based on these quarter numbers?
I don't think we can say that it has already done, but I am confident that it will do it because oil price has recovered almost 70% from the bottom, and it gets 1/4 of the revenue from oil regions. And two, there is a lot of talk about infrastructure boost, within the country, and also a lot of stuck projects were activated. So therefore, I firmly believe that its execution capability will improve going forward, particularly in the next 2 to 3 quarters.
So maybe a little lower one could
certainly
look at this, right? But this quarter, the next year, order inflow growth guidance is 15% or so. Financially 16 over 15 order inflow is actually minus.
Yeah, very interesting. I want to mention one fact that the order inflow is very important, but it's not that dominating factor. Look at the BHL, the kind of turnover, kind of orders they have on hand, but still making losses. So execution and working capital management are more important. And if you look at the working capital management as of this March 31st, is far superior for L&T. So therefore, I would not give too much worry on orders.
Orders, okay. But also, the fact is that if orders are declining, take Thermax as an example, right? Orders have been not declining for the last 2 years.
Correct.
So,
it's to a large extent that is in price. That's why it has crashed from 1640 to this level. So that's why I'm saying that you don't chase it.
Quarter back it was 1,000, 900,000 or so it's continuously come off. Anything else? Any other results which stood out to you? GAIL, Tata Steel, EI, lots of numbers.
Yeah, Tata Steel is not exciting, as we have been quite negative on that because Europe economy is not growing substantially beyond 1%. There is no core raw material available, nor market is growing. No labor cost is not cheap. So I would not touch Tata Steel. Looked at Engineers India, a little disappointing, but that is fairly in price because the stock is down 45% from the peak and sitting on 44% cash. And also it is down because of the fall in turnkey projects. But turnkey projects are normally very fluctuating for Engineers India. So recently there were report of some orders securing, the company securing some orders from the oil region. So I would remain pretty confident on Engineers India. The other one which is worth mentioning is Jammu Kashmir Bank. It used to be traded beyond 150, now it's around 60 below 60 level. What is interesting is that this is one of the few government-owned banks which has posted a double-digit credit growth. For many banks, there is a strong degrowth in the credit. It has posted 12.5% growth. And second, relatively, its net NPA is still lower, and relatively, the loss ultimately after making such substantial jump in the provision still very low. So I firmly believe that those who want to invest for next 12 to 18 months should consider Jammu Kashmir Bank.
Jammu Kashmir. And disclosure-wise, I mean, you would have these in the...
No, all the stocks which I discuss on all the channels, I buy for my clients.
Okay.
I personally do not hold. Okay. And I can disclose that when I have a sell call, I don't come on channel to give buy call.
Thank God. Okay, Piyush, your thoughts on Larsen and, I mean, actually, your thoughts on the market from here. So yesterday you said, well, a bit of short covering initially, then maybe buying also came in. But what from here, in your assessment?
No, my sense is, Prashant, I think there is a growing, I think increasing probability that earnings will catch up. I think the caveat here is that commodities should again not fall off the cliff and to go to the levels we saw in Jan-Feb. I think if commodities behave globally, I think earnings have a fair chance of picking up. I think WPI has also turned positive for the previous month. So, which is also giving a sense that we will see some kind of sales pickup, etc. Especially the base impact would be very large because we have seen WPI falling for almost 17 months. And this was the first month when WPI picked up. So, that is one. So, rising probability that earnings will pick up. So, this micro thing which is going to catch up, which was absent last year. The macro thing, I think, is right now acting as tailwind for the market, but one has to be very careful in terms of oil, to my mind. I think if that tends to go up too much above 50, then I think this macro tailwind can become a macro headwind then. Because a lot of things which went positive on the macro front because of oil falling can then start to look a little questionable. So I think these two factors market is gyrating with. And but I think the micro looks a little better in probability terms that earnings would catch up. And from that perspective, I think if monsoon is good, then to my mind, I think there is a fair chance that one could get a 10 to 15% return from the levels we are seeing over the next 6 to 8 months, or let's say by the end of the fiscal year type. So that is broadly the view. On the downside, I think one has to be very careful in terms of globally what happens, because globally the situation can turn hostile very fast. And I think that can pave a way for a 500-700 Nifty point correction from the levels we are seeing. But I really do not see any major reason, assuming that micro does catch up, that why market should go and make a newer 52-week lows this year, given the kind of a scenario we are in.
You know, generally there is a feel-good factor right now, as far as micros go, local factors, etc. go. Maybe justified, but what are your reasons for you to feel a little upbeat compared to the previous times we've chatted that earnings will catch up now? Why do you say that, Piyush? That is the general feeling anyway, but you know, what are your reasons?
No, but if we are growing, Prashant, at let's say 10% GDP this year, with I'm assuming a GDP deflator of 2.5 kind of a percent and real of 7.5%. Last year we had degrowth. And large amount of that degrowth was because of commodities, the sectors which were into commodities, steel, iron ore, etc., oil. All these companies actually suffered much more. So, plus I think banking, if it tends to establish some kind of a base in terms of NPA, etc., which is also largely linked with this commodity cycle. So, both these things I think have a reason to turn positive this year, at least on a year-on-year basis. So, that will, like if you see results of many companies, the one you were talking about some time back, on a year-on-year growth is because Q4 of FY15 was quite bad. So one has to see that base impact also. Market does get excited on these things. So I think these are the things, and WPI turning positive also would mean that now in aggregate, in value terms, the sales will also tend to grow for the companies. We have seen some bit of EBITDA positive on the last 12 months or 15 months or 5 quarters. But I think on the sales front also, on the aggregate sales front also, things will start to improve, which will tend to trickle down into the PBT or PAT, etc. So I think these are the basic things, Prashant, I think, which gives some kind of a confidence that, but obviously the caveat here is that the commodities are not going to fall 30-40% from where they are today or to the levels where they went in Jan. Then I think all these things may not happen even this year. So that is the catch here, that one has to see the commodity cycle not falling off.
Okay, I mean, yeah, fair enough. WPI going up would mean the opposite of what we've had now for the last couple of years, which is revenues flat and margins expanding. So margins now, maybe expansion will be restrained, maybe even lower, but revenue growth can pick up as the WPI stays in positive, maybe that will get reflected. A couple of other stocks. So Cummins now is down 3%. Tata Metallics is up 5%. It's doubled in the last many days. AI Engineering is up about 3%. So Cummins, Tata Metallics, AI Engineering. The others I've already mentioned. AB Fashion, Aditya Birla Fashion down 5%. VRL is up about 6%. So it's off about 5-6% from the lows of the day. So these are some of the specifics on your screen. 116 odd points on the Sensex. About 40 points, I guess, on the Nifty as things stand. Anything you'd like to do with that kind of view, Piyush? You're saying 10-15% possible, so 8,500 odd possible, 6 months and that kind of time horizon. Yeah.
So I think with some kind of that's the view we have maintained for last 2-3 months, Prashant, that with some kind of a 300-400 point put spread, you tend to go long the Nifty. And that has I think worked well over the last 2 months especially. So I think I would go with that assumption that yes, I think downside could be there, but abrupt downside may not be more than 300-400 Nifty points. But obviously one has to keep an eye on global factors, what is causing the downside. It is very easy to say at 7,900 that 76 looks like a level where you enter, but the reason why market went to 76 has to be seen at the time market is at 76. If there is a reason to revise the view, then one should do it. But generally on an overall basis, I don't see market sliding too much below 76 for if I take the next 2-3 months, especially into the monsoon. I think market tends to price the event before the event. So there will be euphoria. If monsoon is really good, to my sense, I think when the July results or the first quarter results tend to come out and the monsoon is good sometime in the end of July or beginning August, there can be a little bit of euphoria in the market. Now things are going to be good, consumption is going to pick up, monsoon is good, etc. So that kind of a scenario market may tend to price in a little earlier. So I would say that it is better to be long the market before the event, and which the event obviously is the monsoon. Plus obviously the monsoon session of the parliament. If there is some hints that GST this time has a much higher probability of getting passed, then I think that also market will tend to factor in. So there are 2 or 3 these positive things which are coinciding to my mind in the next 2-3 months, which I think augurs well for the market. And market sometimes tend to move, I think, much faster than what can anticipate. So the thing which looks like 6 months away or 3 months away sometimes happens in 2-3 weeks or 4 weeks, which happened in the month of March also. Suddenly in 3 weeks of March, Nifty was up 700-800 points from the bottom. And market has made a good base last 2.5 months. So technically also, market looks to poise. Like what you were mentioning, market took 5 days, I think, to go down 200 points, but it took less than 1 trading session to come up 200 points. So which is also suggesting that market seems to be in a very positive frame of mind from a market setup also, which is also as important. Technicals are also important to some extent. So I think everything is pointing to that there could be a 300-400 point dash from the levels we are, especially after this breakout above 79, 80 odd level. That is a technical resistance level to my mind. I think the market tends to break out above that level, then 83 could happen faster than what we can imagine.
Sugar, your thoughts?
He made a very interesting point about the oil price rise. That's what I've been also concerned for. Companies which are using oil derivatives, like paints and many chemical companies. If you look at carefully the March quarterly results, the maximum gain came from the crash in the raw material price. That benefit is not going to be there from June and September quarter onwards. So this is a time to be cautious. And second, as far as the market is concerned, I remain quite optimistic. The indicators, the biggest one is that the global deflationary fear is receding, in my view. Japan has reported better GDP number. Russia contracted less than what was seen before. And US also, all of us know whether it is retail sales. So a lot of indicators are pointing towards. Only exception is China. China is not showing, but then all the material prices are up. So China being a major resource producer, China should also start. So this is very important for India, according to me, the fear of global deflation, apart from the monsoon. And other indicators like tax collections, particularly excise duty collections, that also give me a little comfort on improvement. And then the earnings also much better as compared to previous quarter. So I remain very optimistic. If monsoon doesn't fail, I believe market should rise minimum 15% by end of this current calendar year.
Minimum 15%.
15% by end of December 31st if monsoon is good. Monsoon fails miserably and think it is going to be disastrous.
Yeah. There are no, I mean, it's still all forecasts, but I mean, there are no indications that it should be a poor monsoon. It should be a good monsoon.
But very rare in the last 5 to 6 decades. 3 times failure, I don't think we ever had in the last 50 years. But of course, I keep saying that history is only source of learning. It doesn't become a law.
Okay, any specific thoughts on Ujjivan Finance, which reported numbers?
See, most of these companies which have come out of the IPO, there's a lot of action after the listing for 3 to 6 months. But one should stick to the valuation. There is no valuation comfort at this price.
No, for the stock to be up 7%, I don't understand. The IPO came, the management, while marketing the stock, would have shared the kind of growth they're going to do. Right?
So
numbers were known till the first half. They would have obviously. So what is the big surprise here?
I'm not surprised because more to do with the floating stock, the institutional participation. A lot of things depends upon. The short term, my view is that unfortunately, fundamentals do not play a role for more than 20% of the price change. 80% it is only the tactical in the short term. But long term, I remain optimistic. Fundamentals ultimately prevail.
Yeah. Okay. Specific thoughts on Nalco, Choka. So Nalco yesterday announced that they're going to do a buyback, right? 25%, I think, is what they said of equity. Now this is a cash-rich company. The Nalco company has also said that they're going to. The government is also going to participate, which is the majority shareholder. This means cash goes out of the company, right? Assume that the price at which they're going to do the buyback is 44 rupees. Yesterday's closing was 43. I mean, if the government is the sole seller into this offer, then the government holding drops to about 54%, and the cash on the books from 5,400 crores drops to about 2,400 odd crores or so. Now, cash on the books has been a big source of comfort for many of these cash-rich PSU companies. That kind of goes away. It also hits the finance income, which is a large source of income. What are your thoughts? And could this set a precedent for other companies, Nalco, NMDC and others?
It's a very interesting question. It makes sense for the government to do buyback only if they are willing to buy at a discount to the market price. Because if it is at the market price or above market price, even the public shareholder will participate, the government stake will not come down. So logically speaking, the government has to do at a discount. Then only the buyback will go through successfully. And that is the case, then it is positive. Because though you lose interest income, proportionately the equity also goes down. So therefore it will be significantly EPS accretive. I believe the government should do it. I mean, they should do it and they should reduce the stake. In fact, I would say that government should take a bold decision of selling off all these commercial ventures. There is no point. You look at Hindustan Zinc market cap and Nalco market cap about 15 years back. When Hindustan Zinc was sold out, entire market cap, if my memory is right, it is around 1,000 crore. And today, just see the value of 29% government holds. So all these small, mid-sized PSU companies, they should sell it off. There's no point in holding them.
Right. No, but that is a more ideological kind of view. But the point is, if something like this happens across companies, how is the market going to perceive it?
It is going to perceive very positively because a lot of companies like Engineers India, Moil cash is 80% of the market cap.
No, but then the cash support goes down, right? That's a big reason.
Yeah, but what happens?
And it also will impact PBT at the net level. EPS also gets impacted.
Yeah, definitely. There is no doubt about it. But then what happens? Like if you take companies like Engineers India and Moil, the entire cash will not go because the cash is so huge. Only the pot of cash will be used because the government will not reduce the stake below 51%. So when government has 80% stake in Moil and the cash is 80% of the market cap, obviously 1/3, 1/4 of the cash only will be used for the buyback. Therefore, still there will be opportunity for interest income and also the EPS will jump substantially proportionately. So therefore, it will not be a negative at all. Net to net, ultimately it will be positive.
Okay, fair enough. And this includes, across a range of companies, right?
Yeah, certainly. I think I wish they do it. Because every time they announce a divestment, they kill the market cap. Look at BHEL or Engineers India. This government also have not changed the strategy. They should have option method to divest the stake. No point in announcing and then killing the wealth of government, public shareholders, then dump it on LIC ultimately. Again, the public money is involved. They should change the strategy. Either go for buyback or go for outright sale or go for divestment through option method.
Any thoughts on VRL, Choka? I don't think we've discussed this. Or did
No, we discussed on Tuesday,
Okay.
right time when it came. I would not touch it, below 250 only. I will be comfortable because as we discussed that time also, March quarter result is quite bad. It's very bad in terms of the profit degrowth. So therefore, it doesn't command this kind of 30-35 PE on trailing basis. So I would buy only if it falls below 250.
All right. Thanks very much. Piyush, thank you for joining us. Good speaking with you.